Good morning, Paul Georgie from Allendale. It's January 4th, Wednesday morning, and grain markets a little lower on some profit taking from yesterday. However, corn showed a rebound here late in this overnight session, mainly because of weather in South America. The dry conditions in Argentina continues. Weather forecast has not really changed. There is a chance of some rain this weekend, light amounts according to our weatherman Drew Lerner, and therefore, continued stress on the crop coming out of Argentina. We did some work on some analysis on what kind of yield damage could be in place. Looking back in the last 4 years, 4 out of 5 years, they've had dryness in Argentina. The crop has not been as good as they'd like to have seen. This year, the USDA is looking for 121.8 bushel an acre for this Argentine corn crop. Last year we had a yield of 99.6. The worst yield that we had was in 2008 when they had the most severe drought. That was 98.8. Drew says that the dryness this year is not as bad as 2008, and it's not in the same areas as in 2008. So certainly going to see some reduction from what the USDA had forecast last month as far as the Argentine corn crop. But how severe and how big of a cut will they make? And that's the big question that we've got coming up here on this January 12th supply-demand report. There's a lot of adjustments going to be made. Historically, this report gives you a tremendous amount of adjustments in all areas. So any guess by the trade at this point and up until the report is just that, is a guess, because we went back and looked over the last 5 years what kind of change happened from the close of the day before the report to the close the day of the report. There's been at least a 20-cent move in corn and about a 36-cent move on average in soybeans in one direction or the other the day of the report. So as we prepare for this report, it's time to get some options on, use some option strategies right now to get positioned to take advantage of the volatility that potentially comes out of this report next week, Thursday. In the outside markets, the dollar is stronger, therefore euro is weaker. Some comments out of Greece this morning or overnight that they feel like they will be kicked out of the EU sometime even within the next 3 months. That's creating some concern again, and the headlines getting some attention for the EU, causing some pressure in the euro currency. The crude oil lower this morning off of that huge rally that we had yesterday. We're down about 50 to 70 cents there this morning as markets adjust from the volatility that we've seen on the first day of the trading year. In the livestock trade, quiet yet in the cash trade. Product is a little firmer in the select, a little lower in the choice. We feel that we may have another good day of product trade here, and then see some pressure in beef as the packers start next week into a full kill week, getting the cattle adjusted and back into the slaughter process as we get these cattle back on feed and ready for market after the snowstorm we've seen a few weeks ago. So look for more cattle to hit the market here next week and could pressure the beef trade. Likely the packers will be anxious to try to buy some cattle at lower money. We think that they probably will have to pay steady here this week to get the numbers they need. The hog complex, a lot of volatility there, a lot of spreading as we've seen nearby contracts gain on the deferreds. Yesterday, we're seeing some more of that here overnight. That the spreads got a little overexcited there. The cash market in the hogs should see some improvement here as packers get back to full kill weeks, needing hogs to fill those chains as we go into next week. Look for some volatility. Stay in touch with Allendale Research. Don't forget to sign up for the Allendale Conference coming up here on January 20th, 21st. We look to see everybody there. Thank you, and we wish everybody a very successful trading day.